This is Channels Television's breaking news.
Straight from our newsroom, 4 members of staff of the Osun State College of Technology, SAOK, kidnapped on Tuesday, have regained their freedom. The freed captives were among 8 people initially kidnapped on that day. While 3 were freed almost immediately, 1 was unfortunately killed in the process. And that's the story this morning. The abductors reportedly killed one of the victims soon after they were kidnapped. They later released 3 of captives comprising 1 lecturer and 2 students of the Osun State College of Technology. The released captives claimed their assailants were armed headsmen who were demanding a ransom. Those claims are yet to be fully verified by the news channel at the moment. It is not yet clear if a ransom had been paid to secure the release of the victims. But what we have from our newsroom right now, our correspondents reporting that the release of the captives has been confirmed by the police public relations officer in Osun State, Folashade Odoro. That is the news we have at the moment. 4 Osun State College of Technology staff members are among 8 persons originally abducted by the government, including 2 students. Unfortunately, 1 of the victims was killed by the abductors, according to initial reports. The released captives claimed their assailants were armed headsmen who were demanding a ransom. We cannot confirm that yet at this point, if a ransom was demanded or if any ransom was paid for the release of those students and, of course, a lecturer. We'll give you updates at 11 o'clock when we come back to our regular news bulletin. Let's continue our regular business morning here. And of course, this week is more about financial inclusion and financial technology. We spent nearly 4 days of the current business and market week talking about that here in Lagos. For the first time, Nigeria hosted the entire Africa for the first ever Fintech Africa's Festival. And of course, among the top delegates speaking across Africa, this was an official of the International Monetary Fund, and that's the country rep for Nigeria, Dr. Amine Marti, and he spoke about what is being done across the world and what we need to learn to get Africa's financial technology space up and running.
You have mobile access and the internet, but you have big data and artificial intelligence. There's a lot of data that you can use to derive patterns and predict, so on fraud, CFT, AML, and this could also, for example, in terms of the banking system, when you have the loss of corresponding banking relationship, the fact that you have this AI and this technology that you could use, that could maybe play a role as a substitute. You have the distributed ledger technology, which permits a jump in computing power and allows you to use that networking power for distribution, or it allows you B2B business. And then, of course, you have cryptography, which allows for more robust security system. But why are we talking about all of this? What's the point? The point is that it can lower the information costs, increase transparency. You can have contract enforcement. You had land registry that it can be done online. And what is that getting us? And that's the last column. Financial inclusion, financial deepening, cross-border payments, more inclusive growth, and this is where you need to have financial access. For example, in Nigeria is 40% in terms of exclusion, and with the dichotomy between the north and the south. These are the type of technologies that will help reduce some of the challenges, and then obviously promote transparency and reducing corruption, depending on what format you have. Now, to do this, what do you need to have? Next slide. Hard infrastructure. It's clear that you need 2 types of investment. You have, for the new businesses to evolve, you need before you had cell phone towers, but you also need to have stable electricity, you need to have broadband internet. That requires investment in hard infrastructure. You also need investment in soft infrastructure, and this is what I call the regulation to support a favorable business environment. This needs to be enabling. And then, obviously, invest in skills to understand financial literacy, to understand what does the new technology, what are the and all of that also requires policy, also at the educational level and up. Next. Now, when you do this, you have to keep in mind trade-offs, right? So when you need to support the fintech, you need to have electricity and internet, but then you need to also look at who will pay for it. We need to know if the investors, what are the risks and the return of such investments? And you need to also understand, and this is what you have on the right side, what is the size of the infrastructure gap? You know, for Nigeria, the number I heard for the infrastructure gap is 35% of GDP relative to emerging market peers. That's quite a lot of money. But then you also need to find out how you finance it. And then you have to choose the technology choices that you want to do, and it also depends whether you want to do microgrid, large grids on the energy mix to try to get to expand your mobile system. So a question here that comes, and you know, I'm from the IMF, we have to talk about the trade-off in the economy, is how do you mobilize the revenue? What do you get in terms of the benefits? And try to do the cost benefit. Should the government be involved? Should it be more the private sector? And how to go about that? And Ebrima talked about some of these issues. And you know, the role of the government and institutions, I mean, when you think about M-Pesa in Kenya, it came about, it expanded, but when it first came into play, DFID, the UK Development Agency, also played a big role in helping that. So, you know, the financing, sometimes just to kickstart the process, could also be helping, not just the financing, but also the technical expertise. Next slide, please. Now, as you look at the trade-off, you have to look at the trade-off on soft infrastructure also. And here, how do we manage the risks? So you have fast pace of innovation. You saw technology, you can't just keep moving. In regulation, that's usually slow moving. So at the end, how do you not compromise the objectives you have in terms of financial integrity, financial stability, solvency in some cases, all those rules that we know are already there in the financial system. But then you have to deal with the new regulations. So now you get mobile banking, there's no deposit, you have cryptocurrency, and all of that goes out the window. So you need to have the right regulatory environment that doesn't stifle such innovation, but also ensure that if something goes bad, you, the consumer, doesn't have to bear a big cost, and also how that cost is then being borne by the whole society as a whole. So those are choices that have to be made, and given that for sub-Saharan Africa, the focus is probably going to be more on small value payments. It's okay to have a regulatory environment that would be maybe more proportional to what that is, right? So just go move ahead, and maybe regulatory sandboxes could be one way of looking at it to make sure that you're not stifling all the innovation. And on AML, CFT, with identification, all of that is going to be needed. There's a global push for that, and the one risk is to make sure this new technology is not there to create another vacuum for such transactions to happen. Next slide, please. So when we look at the soft infrastructure, let's also keep in mind the big macro picture. And here, what do I mean about that? Well, you're going to need education, and you're going to need to upgrade the skills of society. You have the youth, and I saw we had a discussion earlier this morning about the youth and millennials. Well, you're the future. You have the fourth industrial revolution is upon us, artificial intelligence, etc. But the skills that are being taught will need to adapt. And that is one challenge that you'll have to do, because that's necessary to improve productivity, improve employment. And also, how is that going to be linked to the rest of the economy? So you have a labor market that will need to be evolving, but then, you have technology, you have mobile money. What does that mean? Well, in China, as you had mobile money, there was also a move towards e-commerce. So are we developing services industries? What is being done to facilitate this type of transformation of the economy that may go from some manufacturing agricultural industry to maybe other types of industries? And I think that also needs to be clear in terms of where the government is going to be. So to conclude, I'll have 3 slides that basically kind of rearrange the presentation. So if I want you to remember something, and our paper will go into more details on this, including with some country examples, on what are the policy recommendations on hard infrastructure? First, assess the size of the hard and soft infrastructure gaps. Then you have fixed the utilities. Public utilities in the region are a problem. Access to electricity is very low. In Nigeria, it's 4,000 megawatt per hour. You know, fixing the financial governance and health of these utilities, cost-reflective tariffs, etc. Those will be necessary to maintain a stable supply of electricity. Without that, it's going to be very difficult to expand. And then you have to promote options for energy. You could have maybe microgrids and all of those that you can look at. Please stay on the previous slide. And then, obviously, you have to mobilize financing. And when I talk about mobilizing financing, all sources are good. Domestic revenue mobilization. In Nigeria, we know that's a challenge. In Nigeria, non-oil revenue is 3.4% of GDP. Very low. There's quite below the average of sub-Saharan Africa. So there's a lot that can be done on that side to mobilize revenue to be able to spend on priority spending. Then you have concessional financing. You have bilateral financing. I talked about how some bilateral agencies could also help. And then let's not forget domestic and foreign investors, because FDI could also be helpful on that. Next slide. Now, on financial regulation, adopt the principle of proportionality. Make sure that on strengthening consumer protection from cyber risk, fraud, and AML. Important ID, KYC procedures to make sure you are protecting your, the identification of the users. And then financial literacy is the last one. And then my last slide on soft infrastructure, on policy recommendation, is that you need to adapt the education skills and labor policies. And that's key. This is for the long term. This needs to start now. And this is how it's going to really boost human capital and the economy. For Nigeria, we've seen with the Human Capital Index how there's still a lot that can be done, with Nigeria ranking 152nd out of 157, and on educational outcome and health outcome, and all of that is actually necessary in terms of education to move beyond just adopting the labor scale and financial literacy and moving towards a digital economy. And then trying to consider the synergies between the digital economy and fintech. And last but not least, accelerate the structural transformation, which means how do we use fintech? How do we integrate that in the economy and develop industries that may not already be existing on e-commerce and others?
Dr. Amine Mati, the country rep for Nigeria of the International Monetary Fund. Let's come back after the break and still tracking financial inclusion. There's a new report by FINA on Nigeria's access to credit. It's an annual report which we are just flagging off there for executive summary on the program right after the break.